Let's talk a little more about this with NBC News senior business analyst Stephanie Ruhle. Stephanie, this is the most extensive government intervention in the banking system since the 2008 financial crisis. How do yesterday's actions by the government compare to what was done back in 2008?
You are 100% right. We have not seen a bank collapse and a rescue like this since 2008, but it's very different. 2008 was a contagion for real. It was about an entire industry. It was about the mortgage industry. It was about the banking industry in total being overexposed. This is very unique. And Stephanie Gosk mentioned it before. Silicon Valley Bank was sort of different from anyone else. It was the premier bank that funded the startup community, the tech community. In large part, if you were a startup, you had to do business with them. They were the cool kids. It was not cool to be doing your banking with a big bulge bracket bank. Now, unfortunately, this massive concentration wasn't caught by regulators, and it was allowed, right? It shouldn't be that one institution has that kind of exposure to one industry, right? But COVID happens. We know there's huge investment in startups. This bank has ballooning numbers in terms of deposits. They went from $40 billion to almost $200 billion. And what do they do with that money? They made a horrible move, and they invested it in long-term treasuries and mortgage-backed securities. Now, don't let your eyes glaze over. Why does this matter? It was a terrible move because this happened when interest rates were really low. So interest rates move up with Jay Powell trying to lower inflation. What does that do? That makes the value of all those investments plummet. The bank then had this shortfall. Last week, they decided we're going to go out and raise money. It spooks the market. And as Stephanie said, they saw all these depositors pull huge amounts of money out. That caused a run on the bank. It is a unique situation, different from 2008, but one that, as you can tell by the government's actions, needed a rescue.
You know, so Stephanie, U.S. government steps in, launches these emergency measures, allowing customers to have access to their deposits, giving banks access to emergency funds. So in response to this, how are the financial markets looking? Is this going to be enough to put them at ease, do you think?
Well, we'll soon find out. Listen, those involved in SVB and other smaller banks, especially depositors, were absolutely panicked this weekend. You had companies across the country, as you just heard from that small business owner, that didn't know if they'd be able to operate or make payroll. That has been solved. However, when you look at some other smaller regional banks this morning, their shares are in the pre-market down. People are concerned that there will be contagion. There shouldn't be that concern because the government has made it really clear. If you're a depositor, your money is safe. We have your back. You saw them do it with SVB. You saw the FDIC take over that other bank Stephanie mentioned, Signature Bank. So things are still looking shaky in the markets, but that might just be short term.
So, Stephanie, later this month, the Federal Reserve is supposed to have another interest rate meeting. What do you think, if any, impact this will have on the Fed's decision in terms of rate hikes? And just big picture for people who are in that category of eyes glazing over, what should they know about all of this if you're just kind of the average person taking in the news with your coffee?
Okay, if you're just the average person taking in the news, you should feel safe with your money. Remember, even if the government didn't bail out, didn't come in and step in, up to $250,000 is protected by the FDIC. So not many people have more than 250 grand sitting in a bank. That's step one. Step two, is the Fed going to raise rates? Listen, we know we're still in an inflationary environment, but Goldman put out a note last night saying they most likely won't raise as much or as quickly as you were thinking. What just happened to SVB is a big warning to Jay Powell. Remember, you raise rates quickly, there are consequences. I'm not saying SVB did the right thing. They absolutely did the wrong thing, but this is a consequence of rates going up quickly.
All right, Stephanie Ruhle, thank you so much. We appreciate it.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.